I thought we'd take a look at stock of the day, one stock that I choose that's in the news headlines. And now one never far from discussion here on the call and in the mining space, but largely staying under a lot of radars is the Aussie lithium and iron ore play, Mineral Resources. Up over 75% in the last year. Company out this morning with the big news. It's pulling the trigger on its 5.4% stake in lithium specialist Pilbara Minerals. They're going to bring in about $330 million from the trade. The move follows a Pilbara Minerals share price that is about 500% better since Mineral Resources first bought in October 2016. As far as the proceeds are concerned, the company flagged in its forward guidance the first priority is to recharge its capex coffers. Now, Mathan, you've always been a big fan of Mineral Resources. You talk about it often on the call. Number one, is this a good deal for Mineral Resources? Number two, is Chris Ellison, I think it is, who's the boss of Mineral Resources, saying this is the peak of the lithium market and I'm getting out. And should we all follow?
Yeah, that's the interesting one. MinRes has a huge advantage over a lot of other iron ore plays because it's probably has the best iron ore exposure for a small cap, but it's actually not that small. It's quite big. So it tends to be a fan favorite. Now, the CEO, he's a dividing character. Some people love him, some people don't. and it kind of hurts their stock selection. So you kind of have to ignore that part. But look, he's been really, really good. The track record is amazing. He gets his hands into the pies as things improve, and he has a knack of getting out before things go a bit pear-shaped. So you have to take it seriously when he's selling out of lithium at this point. But on the flip side, he already has his own play in lithium, so he doesn't necessarily have to be in that. So there is a certain amount of, I suppose, justification to it. When you're locking in that kind of profit at any time, it's a good trade. So it's hard to look badly. I think MinRes, as it is, it's probably in that cycle with where iron ore is. It's got a huge exposure to it. So in that context, in an uncertain iron ore play, this is probably going to come back a bit more. I know people were getting overly excited when it got to $60, $70. At that point, it was actually pricing way too much. The risk return didn't make up for me. But here, it's actually not too bad, but I think there's still more downside. I wouldn't jump in and buy MinRes here, but I think there is another cycle low for iron ore, and that's probably the time to jump in. The Chinese data over the last couple of weeks has been atrocious, so I don't see the real reason to jump in till the Chinese move on stimulus. Trying to pick the bottom on these things can be very painful, so I'm staying out of it. Look, the EV thematic is very strong. You can see how what's playing out, in a number of different sectors. I mean, a number of different regions playing into the EV play. So all those commodities will continue to play. I think lithium is one of the solutions, so it'll play. But, geez, a lot of those have had massive runs, huge runs. So taking profit is not a bad thing here.
Yep. And you were saying Mineral Resources, even though it's getting out of Pilbara, still has its own lithium play anyhow.
That's right. I mean, it's the two that stand out for me in that category is Min Resources and IGO. Right. They're giving you that double play, and in these kind of uncertain markets, you always look at these double plays with good management.
Yep. Rob, what did you think of the deal today, and also Mineral Resources stock price at the moment?
Yeah, so look, we'd agree with Mathan about not wanting to buy in at these levels. If we held it, we'd lighten it. They're doubling down on their iron ore play. Previously, back in January, their share price, rightly or wrongly, had a really huge positive correlation to the lithium price. It was about 97%, I believe, and it's currently down to about 80-odd%. Which would kind of back up more about their actual revenue composition, where currently they've got about 82% of their revenue comes from iron ore, 15% from mining services, and only about 3.5% from lithium sales themselves. So, people have always looked at Mineral Resources and thought lithium, but really it's been all about the iron ore. I'm not sure if the viewers would remember, but back in October 2016, when Mineral Resources actually got their 5.4% stake in PLS, it was actually because of a dispute and trying to resolve a royalty and offtakes disagreement. So that's how they got the stake. As Mathan said, they're selling it for a couple of $100 million profit today, so that's going to be good for them. But they're really doubling down into the iron ore space. They're taking a 40% direct interest on top of the 4.5% indirect interest in the Red Hill Iron Ore joint venture. So yeah, look, we're probably the same opinion of Mathan. In the iron ore, probably isn't going to be going gangbusters anytime soon. For us, if we had clients who were wanting to get exposure to either iron ore or lithium, we'd say in iron ore, we'd probably prefer Grange Resources, which is a stock that we spoke about a couple of weeks ago. And if they wanted to get exposure to lithium, we'd point them towards PLS, actually, if there was a developed lithium play. Or, as I've said a number of times, Pan Asian Metals, which is the up-and-comer lithium play, which coincidentally popped about 400% last week. So still good value in that one, if you're into small stocks. Otherwise, PLS for your lithium as well.
Okay.